Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 15 September 2025. Brookfield Asset Management is reportedly in discussions to acquire Yes Communities, a US manufactured home landlord, from Singapore's GIC for over $10 billion. The Canadian asset manager has been in negotiations for several months, though a final agreement has not yet been reached. Yes Communities, which GIC acquired in 2016, manages over 54,500 home sites across 18 states. Customers are cancelling approved car loans. This is because of the goods and services tax rate cut on passenger vehicles. The 56th GST Council approved reducing the rate for cars up to 1,200cc to 18%. The new rates will be effective from September 22nd. Borrowers are opting for fresh loans after the rate cuts. Reliance Jio and Bharti Airtel are investing heavily in AI, cloud and data centers. They aim to capitalize on India's growing cloud and AI markets. Jio focuses on consumer ecosystems and partnerships. Airtel targets enterprise needs with sovereign cloud solutions. Both companies are building data centers and partnering with tech giants. Homegrown FMCG products maker Marico has announced the acquisition of the remaining 46.02% shares of HW Wellness Solutions, which owns the True Elements brand. This will be done for a consideration of up to Rs 138 crore towards the acquisition of the balance 46.02% equity stake in HW Wellness, Marico said in a regulatory filing. The deal will make the Pune-based packaged foods company a fully owned subsidiary of Marico, which earlier invested in HW Wellness to acquire 53.98% in May 2022. The SEBI board has approved a slew of reforms and ease of doing business measures that will help IPO-bound large companies and low-risk foreign investors among other segments. In a decision which comes ahead of the mega initial public offerings by NSE and Reliance Jio Infocom, the SEBI board decided to recommend the government to amend the statutes governing minimum public offerings. Under the proposed framework, companies with a market capitalization between Rs 50,000 crore and Rs 1 lakh crore would be required to float 8% of their equity instead of the current 10%. Such firms would also get a timeline of 5 years instead of the present 3 years for achieving the minimum public shareholding requirement of 25%. For companies with a market capitalization above Rs 1 lakh crore, mandatory offer requirements would be reduced to 2.75% from the current 5%, while those above Rs 5 lakh crore would need to dilute only 2.5%. Such large companies would also be given up to 10 years to achieve the 25% minimum public shareholding requirement compared to 5 years at present. This means companies can list with smaller IPOs initially while gradually increasing their public shareholding over a longer period, reducing the immediate burden of large-scale equity dilution. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.